How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. Do me a big favor, guys. If you want to keep up with me when I'm not on the airwaves of YouTube, do me a big favor. Get down in the description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow to let me know that you're rocking with me. Just send me a big DM. Let me know you're rocking with me and you got my back. And I'll send you a reply and let you know, thank you. Appreciate you. Well, guys, website, www.richardfain.net. Click on the website. Check out them digital products. It's the second link down in the description box. Second link down in the description box. Go check out the website. And check out those big boy blue chip digital products that I have to help you collapse time frames and get to your pot of gold at the end of the rainbow. Do me that big favor. Go check it out. Also, while you're there at the website, like I said, second link down in the description box. While you're at the website, do me a big favor. Consider joining the Wealth Builders, fastest growing financial community on Patreon. We have over 1,000 wealth builders in our financial community in less than 5 months. So one, I want to say thank you to all the current wealth builders for your participation and just your positive mindset through these volatile times that we're going through right now. So thank you very much for the 1,000+ wealth builders. For you folks that potentially want to join the wealth builders, go to the website. Like I said, it's the second link down in the description box. Click on that website link, www.richardfain.net, and then join the wealth builders. We got a movement going on over here. Join the wealth builders, the Navidians, which we like to call ourselves sometimes, right? But don't get it twisted. We do a lot of different types of big boy blue chip paper assets. It's not just NVIDIA. We do a lot of things over there. None of us are experts. We're just people who've decided to form a community of like-minded people who are going in the same direction, which is financial freedom. So if you want to be a part of that, get yourself over to the website. Like I said, www.richardfain.net, second link down in the description box, and join. Join today. Don't delay, join today. Get yourself out of the matrix. Over 1,000 wealth builders, baby. That's just organic growth. See, when you're helping people and you're consistent with that message, right? People love stability. People want to find stability in their life. They want to find stability in their financial life. And when you find someone on YouTube who has been the same person for 4.5, almost 5 years, saying the same message, nothing's changed, traditional investing, buy and hold, big boy blue chip, long term, people find comfort in that. See, I'm not here trying to sell them a bunch of stuff. I'm not trying to get them in my webinar and upsell them some useless course. I don't do that kind of stuff. And people have seen my consistency over the last 5 years on this YouTube thing. It's been consistent. Ain't nothing changed but the house, the cars. But my message has always been the same. Traditional investing. Take what you earn and keep it, and then multiply what you keep. That's the message for 5 years, guys. Almost 5 years. It'll be 5 years. January 2025 will be 5 years of me with the same message. Over 700,000 YouTube subscribers, right? Had an Instagram page that was almost at 100K before Instagram disabled it. All of that's organic, baby. Why? Because of the message. The message don't change, and it ain't gonna change. I don't care who say what or what they say when they say, it's not gonna change. The message will stay the same, which is traditional investing, buy and hold, big boy blue chip, long term. You do that, history says you win. Okay, let's move on. Let's talk about Moo real quick before we jump into a couple topics. I don't know how long my internet gonna last. I'm having some problems with my internet today. Y'all know I got this raggedy internet where I live, so if it conk out on me, you get what you get, right? But until it conk out, let's keep rolling. www.richardfain.net, y'all know, is the website. But my big boy blue chip brokerage app that I use is Moo. First link down in the description box. That's the brokerage app that I use. And I've been using since January 2024. Now, the good folks at Moo have said, hey, Richard, since you like our app and you're using our app, you're happy with the app, why not offer your audience an opportunity to try the app? And I said, hey, man, that's a wonderful idea. Let's do that. They said, well, okay, if your audience wants to try the app, here's what we'll do for them. We will give them up to 15 free stocks for just trying out the brokerage app. All they got to do, open up the brokerage account. They put $100 in their brokerage account to start buying paper assets. We'll give them 5 free big boy blue chip stocks. If they decide to put $1,000 in their new brokerage account to start buying big boy paper assets, we'll give them 15 free stocks. I like that offer. Sounds like a great offer to me. So if you think it's a great offer and you want to try it out, guys, do me a big favor. Get down in the description box and click on that Moo link and open up your Moo account today. It's the same one that I use, right? If you want to rock with me, hey, rock with me. It's the same one that I use, right? So go ahead and do yourself a favor. Don't cheat yourself, treat yourself. Get down in the description box and get yourself up to 15 free stocks and use the same brokerage app that I use to buy big boy blue chip paper assets. Also, I'll take you one even further. If you decide to open up your Moo account today and send me an email through my website, www.richardfain.net, second link down in the description box. If you decide to do that, I will send you some Moo tutorial videos that help you learn how to use the app, collapse time frames, and get you off to a great start, right? So if you want to do that, like I said, go ahead and send me an email, but don't cheat yourself, treat yourself. Get down there in that description box and click on that Moo link. Go get that free stock, man. Go get that free money. Well, all right, guys, let's dive on into this thing. We got a couple things I want to hit quickly, just in case I lose my internet. It's raggedy. I keep telling y'all that, but I'm working on an upgrade. I'm working on an upgrade to the internet. Just bear with me. All right, let's talk about the Fed and what's getting ready to happen on September 6th, 17th, and 18th. You guys know the Federal Reserve will be meeting, FOMC meeting, right? And in that meeting, they're going to reduce interest rates. The market has already priced in 100% chance that they will reduce interest rates. But here's the thing, nobody knows how much they will reduce. Now, it's widely speculated that it's 25 basis points, but I think we got a report today, the jobs report for August, that may beg to differ. This jobs report says they may need to go deeper on those cuts. They may need to go deeper. 25 basis points is not enough. They may need to go 50 just because of what's happening in the labor market. So let's talk about that. That's the first thing we're going to touch on. Why is this August labor or jobs report encouraging the Fed to go deeper with interest rate cuts? They need to go deeper. So here we go. August payrolls grew by a less than expected 142,000, but unemployment rate ticked down to 4.2%. So we know unemployment was at 4.3% for July. It was at 4.3% for the month of July. Month of August, it ticked down. But we missed expectations on how many jobs would be added to the economy. And that's a problem, because see, what you got to understand about our economy, guys, it's all predicated on consumers spending money. And when consumers are afraid of losing their job and not being able to find a replacement job, consumers start to pull back on their spending. That's not a good thing for our economy. It's not a good thing for companies. It's not a good thing for the stock market. It's not a good thing for crypto. And as I've already said, it's not a good thing for the economy. So that's sort of where we're at. That's where we're at. We're at a jobs report that came in a lot lighter than expected. And that's a concern. That's a concern for a lot of folks. It's a concern for me, because remember, I buy big boy blue chip paper assets to build wealth. And if our economy is not growing, that means companies are not growing. That means my net worth, my wealth is not growing. Just keeping it 100 with you. We need this economy thing to work if I'm going to get to my 10x on my net worth. I need this economy thing to work, right? I really need it to work. So that's been a concern of the Fed all along. Now, remember, 6 months ago, a year ago, we had the reverse problem. We were adding too many jobs. The labor market was too red hot, so inflation wouldn't come down. In that case, what did the Fed do? They kept increasing interest rates until the labor market cooled off. Now, when we look at interest rate hikes from March of 2022 to, let's say, August of 2024, we went from a 0 Fed funds rate to a 5.5% Fed funds rate. That's a lot. That's a lot. And keeping those rates higher for longer has did what? Over time, it has started to deteriorate the labor market. Just like the Fed said it would, right? The Fed said that would happen, and guess what? It happened. So we got to ask ourselves, right? We got to ask ourselves, if this thing has started to deteriorate, is it going to continue to deteriorate? And if it does continue to deteriorate, what does that mean for our economy? Could go into a recession. Could go into a recession. But here we go. Here's the report. Here's the August payrolls report. The U.S. economy created slightly fewer jobs than expected in August, reflecting a slowing labor market while also clearing the way for the Federal Reserve to lower interest rates later this month. Non-farm payrolls expanded 142,000 during the month, up from 89,000 in July. See, July came in at 114 initially. July came in at 114 initially, but then it was reduced to only 89,000 jobs added in July. That wasn't good. Now you come back higher. Let's just stick with the 114 where July originally came in. Now you come in at an original 142 for August. Everybody is expecting that 142 to go down. It will be revised. How much it'll be revised, who knows? But we know most people believe it will be revised, but revised down. But for now, it's 142. It came in at 142. But here's what the experts wanted. The experts wanted the economy to add 161,000 jobs. But we didn't do that. We only added 142,000. So that tells us, if you're looking at this thing over the last several months, you see a trend. And the trend is not the economy's friend. That trend is not the economy's friend because what? The economy is adding fewer and fewer jobs over the last 3 months. How do you stop that? Well, you got to stimulate the economy. The only way you stop that is someone has to do something to stimulate the economy to reverse that trend. How do you stimulate the economy? You reduce rates and you add a new money supply to the economy. That's how you stimulate it. You put more money into it. When you put more money into it, you stimulate it. And you can stop this thing from getting worse. AKA going back to the Fed meeting on the 17th and 18th. How do you stop this, Fed? You can see what's happening, Fed. How do you stop it? Deeper rate cut. That's how you stop it. Here we go. Let's finish up this report. So the jobs report came in at 142, slightly higher than July, but it's still underperformed what the experts wanted. The experts wanted 161,000, came in 142. That's light. At the same time, the unemployment rate ticked down to 4.2% as expected. So that was good news, right? This would have been catastrophic news, right? Here's catastrophic news. You come in below expectation, weaker than expected at 141 when expectations was 161. I'm sorry, you come in at 142 when expectations was 161. And then on top of that, unemployment goes up. That would have been a double whammy. Good news is unemployment ticked down. Ticked down a basis point, right? So the labor force expanded by 120,000 for the month, helping push the jobless level down by 0.1%. The jobless level, AKA unemployment rate, right? When you hear the jobless level, they're just basically talking about the unemployment rate. Though the labor force participation rate held at 62.7%, an alternative measure that includes discouraged workers and those holding part-time jobs for economic reasons edged up to 7.9%, its highest reading since October 2021. The household survey, which is used to calculate the unemployment rate and is often more volatile than the survey of establishments, showed unemployment growth of 168,000. The balance, though, tilted towards part-time employment, which increased by 527,000, while full-time fell by 438,000. All that tells me, guys, is we got a problem brewing. It's not a major problem yet, but it could turn into one unless the Fed acts. The Fed has to act. Now, I don't think 25 basis points, based on the news that we've gotten over the last couple of months with the labor report about the labor market, I think you got to act a little bit more decisively and a little bit more deeper. 25 basis point is not deep enough, in my opinion. That's just my little 2 cents. I think 50 basis points is deep enough, at least for this go around. So this is what the market did. When the market got this news, this is what they did in the futures market, rather. Market showed little initial reaction to the data, with stock futures holding negative and treasury yields also lower. While the August numbers were close to expectations, the previous 2 months saw substantial downward revisions. They're talking about they're talking about June and July. The BLS cut July's total by 25,000, while June fell 118,000, a downward revision of 61. June fell to 118,000, a downward revision of 61. So basically what they're telling you is these reports came in June and July. They came in weaker than expected. And guess what happened? They were revised even deeper, even weaker. So what that's telling you is you got June, July, and August, where you have seen the economy add less jobs than was expected. 2 of those months, you saw unemployment tick up. Only in August did you see unemployment tick down very slightly. So in my opinion, that spells the job market is in trouble. The labor market is in trouble. And we need stimulation. We need them little paddles that they put on people that, you know, when they're having problems up here with a heart attack or not heart attack, but, you know, they ain't something going wrong, the heart unstopped. You know how they put them little paddles on you and they poof, and get you back alive? That's what we need in the form of interest rates. Reduction. 50 basis points of them little defibrillator paddles. That's what we're going to need for the economy right now, because I'm telling you, it ain't looking good. And again, this is my opinion. I'm no expert. I'm just giving you my opinion. So you saw June, July, and August all perform under expectations when it comes to the number of jobs being added to the economy. 2 of those months, you see an uptick in unemployment, and in August, you see a slight downtick, but you still missed expectations. That's 3 months in a row, guys. And what do you think gonna happen in the month of September? It's gonna be 4th month in a row. Just telling you. So Fed got an opportunity to get ahead of this thing now. Now they can play conservative and not get ahead of it, and then we roll around in October and you got a 4th month in a row where you underperform. And I'm just saying, they got an opportunity here. I wouldn't be conservative. I wouldn't be conservative. I would be aggressive on interest rate reductions. Get a little deeper. 25 basis points is not good enough. We got to get deeper. We got to go deeper. 50 basis points if we want to stimulate the economy. And I know a lot of y'all are saying, well, golly, GDP was 3% in the 2nd quarter. Well, you do know we're in the 3rd quarter right now. I mean, 2nd quarter's in the rearview mirror. Who cares what GDP was between April and June? No one cares. I mean, that's in the rearview mirror. You're living in the past. 3% GDP for the 2nd quarter is in the past. You might want to bring yourself on into the future and into the present. Right now in the present, the economy ain't growing that fast. You got the labor market weakening right in front of you in the present day. You can't live in the past. Oh, GDP was 3% in the 2nd quarter. That's great. The key word is was and past. GDP ain't gonna be 3% in the 3rd quarter if we keep this up in the labor market. It's not gonna be 3%. I don't like this whole lot. This is what an expert is saying now. This is what the experts are saying. I don't like this a whole lot. It's not disaster, but it's below expectations on the headline. And what really bothers me is the revision, said Dan North, senior economist for North America at Alliance Trade. This is certainly going the wrong way. What did I just tell you? See, I ain't even an expert, and I know this. I'm not even an expert, and I just told you what an expert just said. A couple minutes ago, I told you exactly what I just read the expert just said. This is not good. I agree with the expert. The expert agrees with me. This is not good. This is not good when you're below expectations for 3 months in a row. And you've got unemployment rate over 4%. It's not good. It's not good. This is a time not to play it conservative, Federal Reserve. This is a time right now for you to step up, put your big boy pants on, your big girl pants on, and go deep. Go deeper on these rate cuts on the 18th. Don't play it conservative. Go aggressive. Go aggressive. and stimulate this economy, stimulate this job market. That'd be the expert agrees with me here. From a sector standpoint, construction led with 34,000 additional jobs. See, you can see the change in just the sector standpoint. Remember in the beginning of the year, who was leading the pack in adding the most jobs at the beginning of the year? Government and healthcare. Those were the two. For the first 4 or 5 months of this year, well, for the first 4 months at least of this year, every jobs report you looked at and you look at the breakdown of where the jobs were added, guess what? Guess who it was? Government was at the top along with healthcare. Now, all of a sudden, you don't see government nowhere in the picture over these last couple of months. Now you see construction, 34,000 additional jobs. Other substantial gainers included healthcare. See, healthcare is still there. Social assistance, 13,000 jobs. And then manufacturing, guys, lost 24,000 jobs in the month of August. Manufacturing. That ain't good news. That is not good news. That is not good news when you lose 24,000 jobs in manufacturing in the month of August. That's not good news. Federal Reserve, you got to go deeper. You got to come up with a 50 basis point on this one, baby, because if you don't, you're going to put us in recession territory. On wages, average hourly earnings increased by 0.4% on the month and 3.8% from a year ago, both higher than the respective estimates from the respective estimates for 0.3 and 3.7. So when you look at wages, on wages, you look at average hourly earnings increased by 0.4%. That's month to month. And it increased by 3.8% year over year. Both of those were higher than what the experts expected. So you got wages from an hourly earnings standpoint increasing month over month, and wages on an average hourly standpoint year over year increasing. The report comes with markets on edge over the next step for the Fed, which has been on hold with rates since July 2023, after having enacted a series of sharp increases to bring down inflation, which they've done. Headed into the release, markets had been pricing in 100% probability that the Fed will start cutting rates when it meets September 17th and 18th. The only question was how much. I started this conversation exactly like that, didn't I? I started this conversation saying to you guys, the market is already priced in a rate cut. So we don't get no brownie points in the stock market if we get the rate cut, because the market already priced it in and says it's going to happen. So you don't get no brownie points. You don't get no bump. You don't get no bounce. The only way you get a real bounce is if they go deeper. If they go deeper, they go 25 basis points, you get nothing. You get a pat on the back and say, we'll see you next time. You don't get nothing for that. You don't get nothing for the rate cut of 25 basis points, so don't look for it. You ain't gonna get nothing. Matter of fact, it might sell off. Y'all know how the Wall Street traders, the aliens, they control the stock market right now. So you could get a 25 basis point rate cut and this thing literally will sell off. I'm just telling you, the aliens are running the stock market right now because the institutional investors, they're in the Bahamas. They're in the Bahamas drinking Mai Tais and getting massages. And they don't let the aliens take over the candy store. They done gave the keys to the aliens. And the aliens are going to do the opposite of what you think they're going to do. Oh, goodness gracious, we got a rate cut. Ooh, boy, I'm going to get me some net worth gain. You can get some net worth loss or decrease, because they're going to do the opposite of what you think they're going to do. That's how aliens operate. They control the stock market right now. Now, how do we take the stock market back from the aliens? How do you take the stock market back from the aliens? We need the Federal Reserve to help us. They got a big old alien gun. They got an alien gun that only the Federal Reserve have. And if they won't use that alien gun, the alien's going to continue to control the stock market for the next 3 months. We need the Fed to step in with the alien weapon and push them out. And the only way they do that is through interest rates. That's the weapon. That's the alien weapon. That's the alien's kryptonite. You know, you have Superman. The only thing that could defeat Superman was kryptonite. And it was found on the planet Krypton, or whatever it's called. Krypton? Krypton. I think it was found on the planet called Krypton. It was kryptonite. That's the only thing that could defeat Superman. The only thing that can defeat the aliens is interest rate cuts. But deep ones. You don't get the deeper you go, the more we can run them aliens out of the stock market. But you need the Fed to go deeper. You gotta get them to go deeper. If they won't go deeper, the aliens will continue to run the stock market. I'm just letting you know. So here we go. Following the payrolls release, futures market pricing briefly tilted towards a 0.5 percentage point cut, but then switched back to 1/4. For the Fed, the decision comes down to deciding which is the bigger risk: reigniting inflation, right? This is what the Fed has to decide. What's more important? For the Fed, the decision comes down to deciding which is the bigger risk: reigniting inflation pressures if they cut by 50 basis points, or threatening recession if they only cut by 25. This is coming from the chief global strategist at Principal Asset Management. On balance, with inflation pressures subdued, there's no reason for the Fed not to err on the side of caution and front load rate cuts. This is coming from an expert, which I agree with this expert. She's saying this: listen, inflation pressures are done. We haven't increased rates for a whole year, and inflation has not went back up. This is what the expert is saying. Listen, we have had interest rates at 5.5%, aka Fed funds rate. Fed funds rate has been at 5.5% for a full year, and inflation has not went back up. Inflation pressures have subsided. Now we need to do what? Error on the side of what? Recession. We need to make sure that doesn't happen. We do not have that subsided. And how do you know? Look at your labor reports over the last 3 months. Look at your job reports over the last 3 months. They'll tell you everything you need to know. Our number one priority should be doing what? Saving the labor market. Because without that labor market, we're in a recession. And when we're in a recession, don't no assets grow. They don't grow, guys. Too many weeds around them. The weeds will strangle your assets and hold them hostage. And then you're going to be at the mercy of the aliens for an extended period of time. You think 3 months is bad that the aliens control the stock market? These suckers might control the stock market for 2 years. How would you like your assets not to do anything for 2 years? Okay, just letting you know, that's where we're headed. But the Federal Reserve has the magic weapon to defeat the aliens and kick them out of our stock market. They do. And that secret weapon is interest rate cuts. And they need to go deep. 50 basis points minimum. That's what we need to get from them. Now, will we get it? Who knows? Who knows? But That's what we need. The recent narrative for the economic data has indicated continuing growth, but a slowdown for the labor market. Payrolls processing firm ADP reported Thursday that private companies added just 99,000 jobs in August, while outplacement firm Challenger, Gray and Christmas reported that layoffs surged in August and hiring had hit its slowest year-to-date pace going back at least to 2005. Listen, man, the writing is on the wall, Fed. Listen, the data don't lie. We are in trouble here. And y'all can stop all of this by reducing interest rates with an impactful 50 basis point reduction. You got to do that, Fed. We got to get these aliens out of the stock market. These Wall Street traders they have to be stopped. These Wall Street traders have to be stopped. These aliens have to be stopped. And I need all of you guys to email the Federal Reserve. Email them, DM them, hit them on Twitter, X, whatever they call it now. Wherever they got a presence, y'all need to be flooding them, asking for that 50 basis point reduction in the rates. You got to do that, guys. Our wealth depends on it. Our stock market has been taken over by aliens. And they look like human beings. They look like you and me, but they're aliens on the inside. Y'all gotta email and DM and text. Get on your social media platforms. Hashtag, reduce these interest rates. Fed, reduce the interest rates. Hashtag it. We got to get these rates down. Stop these aliens. Stop our economy from going in a recession. Come on now, we can do this. The BLS report indicated that the private sector added 118,000 jobs for the month, up from 74,000 in July. Government jobs increased by 24. Most Fed officials have indicated that they also see rates coming down. In his pivotal, okay, here we go again. In his annual speech at the Fed's annual Jackson Hole, Wyoming conclave, Fed Chair Jerome Powell proclaimed that the time has come to adjust policy, though he provided no specifics for what that meant. Okay, Jay Powell, I like you, man. I've been a good supporter of yours, but I'm running out of patience with you. I'm running out of patience with you now. You already know Trump don't like you. So if Trump get in the White House, he's firing you anyways. Because Trump said he's going to be the chairman of the Federal Reserve. Trump going to fire you anyways. So listen, man, you better do something to make sure you keep your job. Because if Trump get in the White House, you're going to get fired. Trump going to be the chairman of the Federal Reserve. Trump said, I should be the chairman of the Federal Reserve and the president. I want to be all of it. Just telling you, Jay Powell, you better watch out. You better do something to hopefully keep yourself in your job by reducing these rates and stimulating this economy. Because if you don't, you out. You are out. Especially if President Trump get back in the White House, you are out. Just letting you know, buddy, and all your rest of your friends, all y'all, he gonna fire all y'all. So you better do something. You better reduce them rates while you got a chance, brother. Get you some brownie points and get these aliens out of the stock market so that assets, paper assets, can get back to growing again and not being manipulated every doggone day. One day they up, next day they down. One day they up, the next day they down. You get good news, that means bad news. You get bad news, that means good news. You just can't keep up with it. I mean, you think you got good news. Look at Broadcom. Broadcom came out last night after hours with their earnings report, beat everything, and stock went. It just, aliens. This is what you get from aliens. This is what you get when Wall Street traders are in control of the candy store. This is what you get. This is what you get. Don't make any sense, but this is what you get when Wall Street traders are in charge of the stock market. This is what you get. With the economy now in whatever that word is, and inflation on a path to 2%, it is now appropriate to dial down the degree of restrictiveness in the stance of policy by reducing the target range from the Federal Reserve's rate, Williams said in remarks before the Council on Foreign Relations in New York. This is one of the Fed folks. He ain't gonna be out there talking like that unless somebody told him he's okay for him to talk like that. So there you go, man. There's my little 2 cents on your August jobs report. That's my little 2 cents. Let's move on to Broadcom, because I think that was a tricky. Let's move on to Broadcom. That was a tricky one. I think that was a tricky one. What do you guys think? That was, but it wasn't no tricky one. Let me take that back. It wasn't tricky. I knew that was going to happen. As soon as Broadcom started talking, I knew it was going to happen. I knew they was going to sell off because, again, I told you what's happening, who's in control of the stock market, right? So let's look at the numbers. Let's look at the numbers. Here are the numbers for Broadcom, at least the two big boy numbers, right? Let's look at the two big boy numbers. Now, for their Q3, which is their fiscal Q3, it ended July. So the fiscal Q3 for Broadcom, again, guys, they're not on a calendar year. They're on some weird fiscal year, so it's different for every company, right? So whatever their Q3 3 months is, who knows, but they're in Q3. And I believe that Q3, what did it I think it ended in July, if I'm not mistaken. Yeah, I think it ended in July. So here's what they did. They beat earnings per share, right? They beat that. They came in at 124, and the market expected them to come in at 121. So $1.21 versus $1.24. So they beat expectations there. And then they beat expectations on revenue. Revenue came in at 13.07 billion, right? They were expected to come in at 12.96 billion. So they beat on top line and bottom line. Well, they beat on earnings. They beat on earnings and they beat on revenue. So let's talk about why did the stock price go down? You already know why the stock price went down, but we'll go through it. Why Broadcom stock is tumbling after earnings beat and how to play the dip. This is the article, right? I tell you what, all of these guys now getting smart with these articles, right? They all getting smart. They want you to sign up for their little service and all that. I ain't finna sign up for no service. So I'm gonna have to figure out a way to get some of this information because I'm not signing up for no service. So they can forget that. Sign up for my service. It's the only way you can look at this article. I'm not doing it. So here we go. Let me see if I can get this thing through Reader. There we go. I got y'all this time. No, I didn't. Thought I got them. Didn't get them. Sometimes you can hit Reader on these things and bypass that, but a lot of times, yeah. So let me see if I can find one in here that talks about Broadcom and why it did what it did. All right. So Broadcom basically, in my opinion, had a decent earnings. It had a decent earnings, but unfortunately, the aliens control the stock market, and unfortunately, didn't matter. Didn't matter if they beat on EPS and they beat on revenue. It didn't matter. I'm sure they went in and they looked at one little thing and they said, well, this is why they didn't do good in this area. They didn't do good in that area. Right? So let's take a look at this thing. If I can find an article that don't want you to pay for any of the information. Jesus Christ, these people. Wow. Here we go. Shares of Broadcom are under pressure after its lackluster sales forecast for the fourth quarter overshadowed its earnings beat. Now, didn't that sound familiar? Wasn't that the same thing that happened to NVIDIA? Remember now, NVIDIA beat on earnings, right? They beat on revenue. Matter of fact, they beat on everything. And here's what happened though. When they gave the forecast for NVIDIA's third quarter, similar to the forecast for Broadcom's fourth quarter, this is where they got them. This is where they got NVIDIA, and this is where they got Broadcom. See, this is what I'm telling you guys. It's not what they did in the past is what they got them on. They got them on what they thought they should do in the future, and they come in lighter than what the market thinks they should do in the future. See, there you go. You got the Wall Street traders who are running the stock market. They know this. So they say, well, you know something? We're going to have an expectation so high that we know they can't meet it. And then when they can't meet it, when they tell us they can't meet it, that's when we're going to ding them. And that's what's happening. Remember now, go back to NVIDIA. Their third quarter forecast was what? For revenue. What was their third quarter forecast for revenue? 32.5 billion. That was the forecast. Remember now, second quarter, they did 30 billion. You would think if someone says, okay, I did 30 billion 3 months ago, and the next 3 months I'm gonna do 32.5 billion, you would think $2.5 billion increase in revenue quarter over quarter is a pretty dang on good increase, right? Not for Wall Street, not for the Wall Street traders. That ain't enough. They want them to do 40 billion. They want them to go from 30 billion in Q2 to add an entire $10 billion extra to get to 40 billion. Well, okay, 39 or 37.9 or whatever their little highest estimate was. But this is how they run stocks down. They put these astronomical, unachievable numbers up. And when the company says they can't do it, basically, they ding them. This is the new thing that the aliens are doing, see? They can't mess with them on earnings from the prior quarter because they've killed it. So what they get them on is this unrealistic jump in revenue quarter over quarter. Stupid, but this is what they do, right? So here we go. Shares of Broadcom are under pressure after its lackluster sales forecast for the fourth quarter overshadowed its earnings beat. Now, this is coming from some CEO, Daniel Newman, joins Morning Brief to dig into the chip company's earnings and its overall outlook amid a heated AI race. Clearly, the street wasn't happy. He's talking about the Wall Street traders, the aliens. Clearly, the Wall Street traders, AKA the aliens, were not happy. They were looking for some sort of outsized number. See what I'm keep telling y'all guys? This is the new game in town. When the Wall Street aliens are controlling the stock market, they've learned, okay, we can't mess with them on earnings when it's from like quarter over quarter, year over year. We can't mess with that. What we'll do is we'll beat them on the future. We'll give them unrealistic numbers and set them up on unrealistic numbers for the future. And that's what they're doing. That's why this guy is saying outsized numbers. It's just stupid. But this is a little more of a story about the diversification of the business as well. So the AI business is performing. You're going to have some complicated networking that Broadcom is going to help solve. And of course, these accelerators, these AI processors, Broadcom is in the driver's seat. They have won some really important designs, Newman tells Yahoo Finance. He notes that while its core business struggled, Okay. Now here's my question. If your core business struggles, how in the world do you have that type of year over year growth in revenue then? See, this is what I don't understand about these guys. You have year-over-year revenue growth of basically 50%, year-over-year growth. But you're talking about your core business. It's just wild, man, how these people find anything they can. Last time I checked, man, if I make more revenue than I did last year, I don't care about that. Nothing else other than that. All I care about is, did I make more than I made last year? I did. That's a good thing. No, you made more than you made last year, but we didn't like the way you made it. We didn't like the sectors you made it in. It's just stupid. So I make 50% more than I made last year in revenue, but now you're dinging me because you don't like the sectors I made it in. You want to make up the core sector for me. You get to choose what my core sector is. It's my company, but you as a Wall Street alien gets to choose what my core competency should be. Not me as the owner of the company or the CEO of the company or the shareholders of the company. No. Wall Street aliens now want to control what companies' core competencies are, what they should deem as their core business. Not the company anymore. Wall Street traders. Aliens want to determine that now. They ain't spent one day working in the company, but they want to determine now for companies like Broadcom what their core competency is, what their core revenue source is. No. I can't change it up every year if I want to. No, I can't do that no more. I got to have one thing I got to do real good, and that's all y'all want to focus on. But if I go get revenue from other places, that's not your core competency. We're not happy with that. See, it's just stupid. My opinion, guys, you got to do your own homework and come up with your own conclusion. But my conclusion is it's stupid. It's Wall Street aliens controlling the stock market. He notes that while its core business struggled, I don't know how your core business struggles if you do 50% more than the revenue you did the year before. How in the world does your core business struggle if you do 50% more revenue than you did the year before? I don't understand that. I'm missing something. I know I'm not that educated. I'm not that smart. I don't know nothing about stocks. I know. But golly, man, I'm missing something. I got to go get plugged into a information machine to give me a download because I'm missing something. I'm missing something. He notes that while its core business struggled, it's not unique to Broadcom, as it is a market-wide macro issue. Okay. So now he's saying he knows that while its core business struggled, it's not unique to Broadcom, as it's a market-wide macro issue. However, Broadcom's VMware acquisition performed well, which he calls a really strong play. Newman adds that overall, Broadcom is a company that was priced well. People thought AI was going to maybe be this explosive beat, and the core business has slowed a little bit, but has some favorable conditions to rotate back over these next few quarters. As the AI race shows no sign of stopping, he believes that there is more opportunity for Broadcom to acquire more hyperscalers. Our forecast for the chip market is showing that this accelerator market is going to outpace the GPU market by somewhere between 15 and 20% over the next 5 years. So across the board, we know that these AI accelerators are going to go big. Here's the thing I don't understand about these Wall Street aliens. They think they know more about the company than the people who actually run the company. That is amazing to me. You don't spend one day in the company working. You don't know nothing about nothing, but you make all of the determinations like you started the business, like you're the founder of the business. You've been there for 20 years and know everything about the business. You sitting on Wall Street somewhere being an alien and don't know nothing about the business, but you think you do. You want to know everything about the business in the article. Like you actually work for the company. Like you actually are the founder of the company. No, dude, you're just a Wall Street alien manipulating the stock market, manipulating everything. That's all Wall Street aliens do. They don't know anything about these companies, but they get into places like Yahoo Finance and Barron's and all this. Their core business, dude, they did 50% more revenue than they did the prior year. I don't care if the bulk of the revenue came from picking tomatoes. Doesn't matter to me. You did more revenue. I don't care if they went out and picked tomatoes and made more revenue because they're a good tomato picker. They made more revenue. Who cares? What's their core business? But I think their core business over the next several... I'm telling you, dog. These Wall Street aliens something else, man. They something else. This joke ain't worked one day in the business. And he right here talking like he the original founder of the business. And he a Wall Street alien somewhere looking at a spread. Goodness gracious, guys. I may go shopping today on the video. I have not even looked at this thing. This thing is down to $102.45. Them Wall Street aliens ain't messing around. I keep telling y'all guys, these guys are not messing around. The institutional investors have left us out to dry. See, that's the thing, man. You know, in this 1% world, they don't care anything about you. They've left us to these Wall Street aliens, and boy, these Wall Street aliens, they're loving this. They are decimating semiconductors. They are decimating artificial intelligence. I mean, they're making so much money off of this. It's just ridiculous. Maybe they had a deal. Maybe they had a deal with the institutional investors. This is what I'm thinking. I'm thinking they sat down at the beginning of the year. I'm talking about Wall Street aliens, AKA Wall Street traders. The aliens sat down at the beginning of the year with the institutional investors. And this is what they said. Listen, guys, we don't want to fight with y'all all year. This is what we're going to do. We're going to give you guys the first half of the year. So Wall Street institutional investors, we're going to give you guys the first 6 months of the year. That means we'll back off. We'll let you guys do what you do, make all of your money in the first 6 months. Y'all give us the last 6 months, or at least give us 4 months of the last 6 months. Give us July, August, September, October, November. Give us 5 months. But y'all got to leave us alone. Go to the Bahamas. Go get you a massage. Let us run the stock market for these 5 months. And then we'll give you we'll give you December back. We'll give it back to you in December. And then you can get one last little push before the end of the year. But you got to give us 5 months where we're going to wreak havoc. Anything that sounds good, we're going to make it bad. Anything that sounds bad, we're going to make it good. And we're going to make a bunch of money. And that's what they're doing, guys. This is what they're doing. They've struck a deal. Institutional investors have struck a deal with Wall Street aliens. And now the Wall Street aliens have the stock market for 5 months. The only way to stop them, like I mentioned to y'all earlier, the only way to stop these Wall Street aliens is the Fed got to step in and use the Federal Reserve taser. It's a taser, AKA interest rates. That's the only thing that can stop these aliens. They look just like you and me, but inside, they're aliens. And the only thing that can stop them is the Federal Reserve's alien taser, AKA interest rates. Got to go deep on the interest rates on the 18th, and we can stop these guys. I'm just saying, man. Look, this thing is down to 101.95. NVIDIA down to 101.95, guys. It started the day at 108. We 2 hours into trading. This thing started trading at 9:30 at 108. This thing is down to 102.68 right now with a low of 101.95. Who in control of what? I keep telling y'all who in control of this thing, guys. It don't make any sense. How in the world does Broadcom beat expectations, stock price tumbles? NVIDIA beat expectation, stock price tumbles. AMD beat expectations, tumbles. Google beat expectations, tumble. Microsoft beat expectations, tumble. See where I'm going with this? I'm trying to tell you what's going on, guys. My goodness. NVIDIA is about to go under $100 a share. I'm going shopping today. If this thing get under $100 a share, I'm going shopping. And I already told y'all, the only stocks I'm buying for these next 3 to 4 months is NVIDIA. If it goes under $100 a share, I ain't buying no more stocks, no more individual stocks. Because these Wall Street aliens, these guys, they got to, listen, man, I can't mess with them. I'm going to let y'all go ahead and mess with them. I'm in the ETFs. See, because they can't beat me in ETFs because they can't beat Vanguard. See, the Wall Street aliens can't beat Vanguard because they got $9 trillion under management. See, they can't beat Vanguard. They're not going to beat Fidelity. They're not going to beat State Street. So I'm going to stick to the big boy ETFs so that I got a chance to make some money in these next 3 to 4 months. I can't make no money in stocks right now because the Wall Street aliens control the stock market, especially the tech sector. Now, don't get me wrong. You can buy the dip if that's what you want to do. That's your financial decision, your financial choice. This channel is not a financial advice channel. This channel is not me telling you what to do, what not to do. This channel is an opinion channel that I give you my opinion on the economy, interest rates, inflation, stocks, real estate, side hustles. That's what I do. This is not a stock market channel. This is not Richard is a stock market guy. No, I'm not. I'm just a guy that like to multiply money when I sleep. I don't care what asset class I got to multiply it in. I just want to multiply it. And right now, stocks have been good over since November last year. So I jumped in and made me some money, just like any good business person would do. But I'm not a stock market guy. I'm just a guy that likes to multiply my money when I sleep. I don't care if I do it in real estate. I don't care if I do it in businesses, side hustles, credit card arbitrage, 5-to-1 leverage. I don't care. I just want to multiply my money while I'm sleeping. But I also understand when I'm outmatched. I'm outmatched. I cannot be a guy that tries to go up against these Wall Street aliens and pick and choose on these stocks because the fundamentals have been thrown out the window, guys. When you fundamentally look at stocks and you fundamentally look at companies, it's been thrown out the window. There ain't no fundamentals. See, fundamentally in business, you're told if I do more revenue, more profit than I did the last year, that's a good business. Not anymore. You can do more revenue. You can do more profit. You can have market share. You can have the best product in the industry and your stock price go down. That's no fundamentals, guys. That don't even make sense. This is what I'm telling you. It don't make any sense. You got a company like Broadcom that does 50% more revenue in this fiscal year than it did last fiscal year. And guess what happens to the stock price? It tanks. Why? Because some guy on Wall Street says, you know something, I think they should do 50 billion in revenue in Q4. They said they're only going to do 20. That causes the stock price to stumble. Some guy on Wall Street who has no idea what these people do in their business says their revenue, here's NVIDIA now. Some Wall Street guy says NVIDIA should do in the third quarter, they should do 37.9 billion. NVIDIA comes out and says, no, we're going to do 32.5, which is 2.5 billion more than we did last quarter. That ain't good enough though. No, that's not good enough for us. We think you should do this. And if you don't do that, you pay the price. Kiss the rain. Kiss the rain or pay the price. They wouldn't kiss the rain. NVIDIA wouldn't kiss the rain. Broadcom didn't kiss the rain. And guess what they do to them? They devastate the stock price. Now, here's the thing with NVIDIA and Broadcom. They don't care because they know their business. They know they're going to be profitable. They know they're going to do well. So they don't worry about it. The only people that worry about this is you and me. The CEO of NVIDIA ain't worried about these Wall Street aliens, because they understand their own business. They know they're going to make revenue, and they know and believe this AI thing is going to move. So they don't really care. Who cares is you and me. And that's who the Wall Street aliens are really attacking. It's you and me. They're not attacking the company because they know they can't do anything to the company because they don't know anything about the company. They really don't. They sit on Wall Street, they look at graphs, they look at charts, and they manipulate. They bend the rules. Why the SEC don't do anything about it, I don't know, but they bend the rules. They manipulate and bend the rules, put out lies, just like this whole thing about NVIDIA being subpoenaed for some. Then you go to NVIDIA, to the CEO, he says, no, we haven't been subpoenaed. See what I'm saying? They just do whatever they want to do to freak you out. They want you to do the opposite of what they're doing. When they're buying, they want you selling. When they selling, they want you buying. That's what your Wall Street aliens are doing right now, and ain't nobody stopping them because your big boy blue chip institutional investors have cut a deal with them, and they're going to the Bahamas. And they won't be back until December, unfortunately. Now, the only saving thing for us is the Fed. The Fed can come in and stop all of this. Just like that. All the Fed got to do is come in and hammer them interest rates 50 to 75 basis points. All of this go away. Wall Street aliens, we will send them back to whatever planet they came from. All we got to do is get a 50 to 75 basis point rate cut, ASAP Rocky, put them back on their funny looking spaceship and send them back to their galaxy. And we ready to rock and roll. Now, will the Fed do that? Probably not. Probably not, because they ain't got enough courage. See, that's the thing you got to understand, guys. They ain't got no courage. If they had any courage, they do it. They ain't got no courage. They got no courage in them. They worried about what people think. They worried about legacy. See, when you get rich like that, man, and you got all the money in the world, and you got all the privilege in the world, you don't worry about money anymore. You know what you worry about? What people think of you. You worry about legacy. See, these rich folks, they don't worry about money. They don't worry about the things you and I worry about because they're rich. They're filthy wealthy. They got somebody that does everything for them. They don't cook for themselves. They don't clean their own house. They don't shop for themselves. They don't drive themselves nowhere. They own private planes, yachts, best hotels, best doctors. When they get COVID or something like that, guess what happened? They get the best treatment in the world. You and I get it. It's a toss-up. You never know who you're going to get. I saw a story where a guy went in, 70-year-old guy goes into the hospital because he got a little pain in his side right here. He done got some old shiesty doctor, done went in and removed the man's liver. The man went in for like a spleen thing, and the man removed his liver. He's a doctor. A doctor. I'm talking about in a hospital working as a board-certified surgeon. The guy removes the guy's liver and didn't have to even remove nothing. The guy had a cyst on his spleen. The doctor went in and removed his liver. You think the 1% got to worry about that? Nope. You and I do, though. See, this is how it works in this country. That's why I'm telling you guys, you got to try to figure out a way to build yourself some wealth to get from under that. But the thing is, these rich folks, these wealthy people, I'm talking about wealth that you and I can't imagine. See, I can't imagine the type of wealth these people have because it's just in a whole nother stratosphere of wealth, right? But they do nothing for themselves. Nothing. Nothing. They don't even comb their own hair. If they got hair, I ain't got no hair, but they do nothing for themselves. Nothing. They don't wash no dishes. They don't mow no grass. They don't check their mail. They don't pay their bills. They do nothing but just wake up and be pampered all day. This is the life that they live. So what is important to them? Legacy. What people think of them. That's the number one thing that's most important to the mega wealthy is what people think about them, not you and me. They don't care about what we think about. The only thing they think about is what other wealthy people think about them. That's it. That's it. That's all they think about. So what do the wealthy do? Jay Powell, all he's concerned with right now is his legacy. He's already wealthy. He's a rich, all them people on the FOMC committee, all rich, all wealthy. All they care about right now is legacy. What will future generations, what will people who I respect think about me if I get this wrong? That's all they think about. And who suffers? The American people. The 99%. That's who suffer. We do all the work and we get very, very, very little of the reward. We take all the risks, all the work, we get very little reward. They take no risk for nothing and they get all the reward. Because you got people like these Wall Street traders manipulating the stock market, manipulating company. Well, they can't really manipulate the company. What they do is they manipulate the narrative. This is what they do. They manipulate the narrative. They manipulate the information that they know get people going. That's what they manipulate. And they work together to do it. To take everything you and I have. That's the goal. To leave us thinking we own everything, but we own nothing. To keep us thinking like we have everything, but we have nothing. That's the mandate. That's the key to this whole thing. So all I'm telling you, man, is this. The stock market is volatile right now. I don't know what's going to happen. I have no idea. Honestly, I have no idea what's going to happen. The only thing I can do is go back to the playbook and run the plays that have been successful for me for 30 years, and that's ETFs. Go back to the playbook. Richard, get yourself in these ETFs and get protected because they can't beat Vanguard. They're not going to beat Vanguard. I promise you that. They're not going to beat Vanguard. They're not going to beat Fidelity. They're not going to beat State Street. They're not going to beat these guys, not in these ETFs. Now, they might have a little bit of a, but I'm protected in my ETFs. These individual stocks, I'm not protected. I got a lot of money in the video. Will I ever get it out? Who knows? Who knows? Who knows? But I'm a big boy. I make a big decision. I move forward. I don't sit around and worry about it. I believe in the company of NVIDIA. There is nothing that they've shown me from a business performance standpoint that would make me panic. Nothing. See, I do know that much because I know companies. I was a commercial banker for a lot of years, guys. I know companies. There is no issues with NVIDIA, not a company. What you have is market behavior and market manipulation driving down the stock prices of all these companies that are in the tech sector. Why? Because, see, these Wall Street traders understand there are no investors who are willing to put a large investment in these companies right now. You and I, our little bitty investment does none but make profit for these guys. But we need large market movers to invest in these companies. And right now, nobody's making large purchases of these companies' stock right now. Other than Wall Street traders, right? They're doing it and then they're running it down, run it back up, run it back down, like a little yo-yo, like a little basketball, but no big time. Ain't no Warren Buffett coming in and saying, you know something, I'm gonna make a $10 billion investment in this company. So nobody's coming in like that right now. There is no hedge fund. There is no, not hedge fund, but there is no institutional investor coming in saying, you know, I'm making a $750 million or $1 billion play on the video or on Broadcom right now. No one's doing that. No one's doing it. They did it 2 years ago. In 2022, they did it. That's how they made all this money. So now they don't feel the need. If you go back and listen to what Kathy Wood said about ARK invest. They asked her, well, if you think NVIDIA is going to do so well, why aren't you heavy in the stock right now? Kathy said, well, you know something, we've already did a 100-fold on this company. We were in this company way before it was popular. That's what Kathy said. She was like, we was in this company way back when it was not that popular, when nobody really knew about it. We've already did a 100-fold. We're moving on to something else we can 100-fold. And that's one of the things that's really slowing down a lot of things for AI and some of these semiconductors. See, because really when you look at the growth of these guys, all of them, I'm talking about Broadcom, AMD, NVIDIA, all of them, it happened over the last 2 years. All the growth started when what? ChatGPT came out. When was that? 2022? That's when the growth started, guys. See, but you got to understand, a lot of these heavyweights was in this thing then, when you and I didn't even know anything about it. So in the last 2 years, they've 50-fold, 100-fold, 200-fold their money. They're out. And unless you get a fresh group of institutional investors that's willing to come in and ride this thing for the second wave, it's going to be tough. Because these Wall Street traders, these aliens, man, they ain't going away. You're going to have to shoot. That's the wrong word. That's the wrong word. You're going to have to neutralize them with interest rates to get them to back off. Because see, interest rates, when you reduce interest rates, that's going to stimulate the economy. It's going to stimulate the economy, guys. When you reduce them interest rates, it's going to stimulate the economy, and they ain't going to have no other choice because people now going to be hungry and ready to go make some money. That's what you get. You get a stimulation in the economy. It stimulates growth. Cheap money stimulates growth. That's the only thing right now can neutralize these Wall Street aliens, because we cannot depend on institutional investors to save us on this one. You can't depend on it. The S&P 500 is not going to say, well, okay, we're going to have 50% weight on NVIDIA and Broadcom and 50% weight on everything else. They're not going to do that. They're just not going to do it. So, you know, for me, going forward, I'm just going to continue to do what? Buy ETFs. I'm done with individual stocks. I bought enough. I can't buy no more. I'm just going to go back to the old playbook and find my 2 or 3 plays that work every time. And that's going to be spelled ETF. That's my bread and butter play, that no matter when I'm in the game, no matter when the game's on the line, that's the play that has always worked for me. And that play is spelled ETF. That's how you combat all of this, in my opinion. These Wall Street traders, because they can't compete with Vanguard. They're not going to pull a fast one on Vanguard, I can promise you that. Vanguard ain't going to be doing something the opposite of what they're doing. Not Vanguard. Not Fidelity. Not State Street. No. They're not going to pull the wool over their eyes like they can over us. So there you go, man. I got to get myself back to what I do best, which is get behind them ETFs and let the big boys handle it. And I'm out of it. I ain't got to be the expert no more. Messing with these individual stocks, I got to be the expert. I don't want to do that no more right now. It's unpredictable. It's volatile. You never know what these Wall Street aliens are going to be doing and lying and conniving and propagandizing and all kind of stuff. I'm not going to be the victim for them. I hope y'all ain't the victim for them, but I'm not going to be the victim. So, all right, man, I'm going to get ready to get on out here and close this thing out. Do me a big favor. Get down in the description box and click on that Moomoo link. Get yourself up to 15 free stocks when you try out the new Moomoo brokerage account. Put $100 in the new Moomoo brokerage account. They're going to give you 5 free stocks. You put $1,000 in the Moomoo brokerage account. they're going to give you 15 free stocks. Here's the thing, guys. Here's your choices with them free stocks. I'm just going to keep it 100 with you. I'm going to keep it 100 with you. Get them free stocks. Look at the companies. Say to yourself, do I believe in these companies? Do I use these companies? Are these companies anything that I know about? And if the answer is no, if it was me, I'm going to sell them and I'm going to put them in ETFs that I do know. S&P 500, total stock market, those types. And again, guys, I'm not trying to be your financial advisor. I'm not a financial advisor. I'm not trying to tell you what to do. I'm just keeping it a buck with you and telling you what I would do. You can do whatever you want to do. It's your financial freedom. I don't have no authority or no license to tell you anything about what to do. I'm just a guy on YouTube. That's it. I'm just a guy on YouTube. But you know something? I'm going to pivot, and at the end of the day, I'm going to win because I've done it for 30 years. See, I'm going to go back to them ETFs that I've been building wealth through for 30 years, and I'm going to lean on them. I'm going to leave this individual stock thing alone for a little while until the aliens don't control the stock market anymore, and then I'll jump back in a little bit. But right now, while they're controlling the stock market, I can't beat them. And they don't see some me thinking in my little limited space up here that I can beat them, because I can't. Why? Because I got this. I got an iPhone. That's it. They got way more resources than me, way more manpower, way more money, way more ability to manipulate markets. How do you manipulate a company like NVIDIA and Broadcom unless you know what you're doing? You just don't manipulate the company's stock like that, guys. Just a regular person like you and I. We don't manipulate a stock like that. You got to be really know what you're doing and have some firepower to manipulate stocks the way these stocks have been manipulated over the last several weeks. Matter of fact, since July, you got to really be doing something and know something and got something to be able to manipulate company stocks. I'm talking about companies that posted profits and you still manipulate the stock to decrease in value. How in the world do you post profits and your stock price sells off? You made money for people and your stock price sells off. Come on, guys. That's not a regular smuggler thing to do. That's a big boy heavyweight doing that. Somebody out there. I don't know who they are. I call them Wall Street aliens. But you got heavyweights out there doing this. This is not a game I want to participate in. So whatever individual stocks I got now, I'm going to hold them until I see there's no light at the end of the tunnel, and then I'm going to parachute out of them. All my little shorts that I got, I'm going to give them the rest of this month, a little bit in the next month. If I don't see no light at the end of the tunnel, I'm parachuting out of them. I'll take my loss and I'll move on. See, this is how real life is, guys. See, this is what happens though. When things are good, right? Everybody's smiling, everybody loving things and talking good and have good things to say and woohoo, celebrating. Oh, the stock price going, ooh, doo, doo, doo. Soon as things turn the other way, that's where real investors step up. That's when you find out if you're a real investor or not. Some of us are pretenders. Some of us are pretenders because you can always tell pretenders because when times get rough, they change. Their attitude changes. What they post changes. See, you can always tell a pretender. Just follow what they say. Just follow their attitude online. If they're in your community chats, if they're online here posting in a live chat, just follow what they say when things turn. Just saying, man, I'm going to stay strong and stay long. I'm going to stay in the video because I believe in the company. That's my biggest individual stock position, followed by the Magnificent Seven. I'm going to stay in the Magnificent Seven, and I'm going to stay in the video as long as there is no business performance issues. I will ride this thing out and stay for the long haul. But monies that I make now, will be redirected to ETFs. One thing my mama always told me, don't throw good money after bad money. Now, I don't think my individual stocks are bad money. I just think the stock market as a whole, when it comes to individual stocks, are being manipulated in a big way. And I like tech. I don't really get down too much with these other sectors. I like tech. Right now, the whole tech ecosystem is being manipulated, in my opinion. Again, I'm no expert here. I'm just giving you my opinion. So what do? I look at my portfolio and I say, well, okay, 11,200 shares of NVIDIA. Do I believe in the company? Is there any business performance issues? No, there isn't. Yes, I do believe in the company. Okay, sit it right here, put it on pause, forget about it, go on about your business. Okay, look at the Magnificent Seven, minus NVIDIA. Do I believe in Apple? Do I believe in Microsoft? Do I believe in Meta, Amazon, Alphabet, Tesla? Check, 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 check. I believe in all of them. Nothing wrong with them business-wise. No business performance issues. This is all manipulation. Put them to the side. Keep dollar cost averaging into the Mag 7. Keep dollar cost averaging into FTEC, which is my information technology ETF. And then keep dollar cost averaging into SPLG, which is my S&P 500 ETF. So that's the dollar cost average 1.0 blueprint. Boom. That's what I'm doing. I ain't gonna stop that. I don't care what the aliens are doing. I'm gonna buy into those every single month, just like I've been doing. What I'm talking about is the money over here on the sideline that's in reserve, that I do lump sum investing, not DCA, but lump sum investing is where I'm not putting any more of that money into individual stocks like I had been doing. No more of that. That's redirected. Lump sum investing is redirected back to ETFs. The ETF I have on my radar right now is Vanguard Information Technology, VGT. And here's why. And then we're going to get out of here. Here's why. So let's go look at VGT. This is why I love VGT, especially when it's time to make some money in ETFs outside of my dollar cost average. See, if some of y'all don't listen sometimes to what I be saying, and you're, oh, go leave. No, I've always had 1.0 where I dollar cost average in. I've been talking about that for 5 years on YouTube. See, some of y'all just don't pay attention. You just want to pay attention to what you want to pay attention to. I've been dollar cost averaging for 5 years. Matter of fact, I've been dollar cost averaging for 30 years into ETFs, index funds, mutual funds. Yes, for 30 years. So that never stops. What I'm talking about is lump sum investing. It's two different things. Lump sum investing, I'm not putting lump sum monies into stocks anymore. I will take that lump sum money now and put into ETFs, in particular, Vanguard Information Technology ETF VGT. Here's why. So VGT was trading at $606 not too long ago, guys. A couple weeks ago. Now it's trading at $532. Here's the thing for me. When VGT gets down to about $500 a share, which I believe it will, if they continue to do what they're doing to the tech market as a whole, that's what grows VGT. I want it to go down. See, when it gets under $500 a share, I'm going to keep watching it. And I'm getting ready to pull the trigger on it. When it gets down, because I know when this thing, see, I'm protected in VGT. Why? Because it has $500 billion in the fund. 500 billion. Yeah. And it's a Vanguard fund. See, they can't mess with Vanguard. Wall Street aliens can't mess with Vanguard. Like I told you earlier, they got $9 trillion under management. You don't mess with a company like that. Not Wall Street traders, because they don't have that much money. You can put them all together, they don't have that much money. They just don't. So here's my plan. Keep DCA into 1.0, like I've been doing, and then instead of redirecting dollars to individual stocks, redirect those dollars to a strong ETF that I know will rebound. This is my opinion. I'm not trying to be a financial advisor. I'm not trying to tell you to buy VGT. I'm just telling you what I'm doing, and I'm gonna make some money too. So what I'm gonna do is I'm gonna let this thing run down, and here's the case study. If you go back and look at VGT, I got in VGT in September 2020. it was trading at $317 a share. It ran up to $460 a share by December 2021. And then in 22, guess what it did? It ran itself all the way back down to 315, 314. This was in 22. And then from 22, I'm talking about mid 22, it ran itself from low 300 a share all the way up 2 years later to 606 a share. One thing I know about VGT, in my opinion, it will repeat history. So if I can get it low enough and just be patient, within a year or two, it'll run itself back up. But I gotta wait. I gotta wait and be patient. Continue my DCA, so I'm 365 days a year in the market, but I'm gonna be patient on this play because there's a lot of money to be made for me and my net worth in this play. So that's the play for me when it comes to ETFs. That's the only one though. So that's the game plan. DCA every single month into the broader stock market, like I've been doing. SPLG, FTEC, MAG 7. Maintain my position in NVIDIA, which is 11,200 shares. That's a long-term investment that I'm prepared to stay in for 10 years as long as there's no business performance issues. Capiche? Good. All right, man. Appreciate y'all. Like I said, hey, man, do me a big favor. Get down in that description box and click on that Moomoo link and treat yourself. Don't cheat yourself. They're going to give you up to 15 free stocks when you open a new Moomoo brokerage account. Y'all know that's my self-directed brokerage app that I'm going to be using over the next 10 years to 10x the net worth. So, hey, man, get in where you fit in. If you want to get yourself up to 15 free stocks, you know what to do. Get down in the description box and click on that Moomoo link and sign up today. Go get that free stock. Go get that free money. And then send me an email if you don't know how to use the app. I will send you 2 tutorial videos done by the good folks at Moomoo. And that will help you learn how to use the app. Basic information, guys. Once you do it once, it's like riding a bicycle. You'll never forget it. So give me an email, www.richardfain.net. Second link down in the description box. Send me an email. Let me know you've opened that Moomoo account. Let me know you funded it. And then I'm going to go ahead and send you the tutorial videos for the Moomoo Brokerage app. They're going to teach you how to use the app. Not me. They will. They've already got the videos ready to go. All you got to do is watch them. And if you're like me, you might have to watch them 2 or 3 times. But that's okay. It's your freedom. Do you want it or not? If you want your freedom, go get it. If you don't want your freedom, don't do nothing. And the 1% will control you for the rest of your life. That's on you. It's not on me. It's not on the world. It's on you. Grab your freedom. Go get it. Claim it. And it can be yours. Guys, get over to the website, www.richardfain.net. Second link down in the description box. Go click on the website. Got 10 big boy blue chip digital products that can help you collapse time frames and get to your pot of gold at the end of the rainbow. Go check it out, man. Over 1,000 of you guys have already bought the digital products. Over 350,000 of y'all have already checked out the website. See, being consistent is a powerful thing, guys. When you're consistent, you say the same message. Ain't nothing changed. It's a new day, but it ain't changed. It's the same message. See, it's powerful. Can't stop this. Can't stop this. You can't stop it. You can't stop it. So get over to the website. Check out them digital products. Get in where you fit in, man. Don't cheat yourself. Treat yourself. Get you some digital products to help you collapse time frames and get to your pot of gold at the end of the rainbow. And while you're at it, if you want to join the fastest growing financial community on Patreon, we got over almost 1,100 wealth builders in less than 5 months. Over on the Patreon platform. Very active community chat. Live streams every Monday at 8 p.m. Eastern time, Q&A style, which I don't do anymore on YouTube. I don't do any mentoring anywhere other than through the private mentorship club. So if you want me and your gang of 5 and you want to email me and ask me questions and pick my brain, can't do it unless you're in the mentorship club. That's just being real. This is the world we live in, guys. This is the world we live in. So I live in a world that's predicated on a win-win situation. I can't live in a world where you win, I lose, I win, you lose. No, I want to live in a world, and I get to create my own world. See, a lot of people think, oh, no, you can't do that. No, I can create my own world. I create my own world. I created that community with 0 people, just me. In less than 5 months, I got 1,100 of them over there. Can't stop this, man. Can't stop it. Can't stop it. My recommendation, instead of trying to stop it, figure out what you need to do to get you where you need to get to. I keep telling y'all, stop wasting energy on what other people are doing. Put some energy into what you need to do to get where you need to get to. That's what you should be doing. Don't worry about me. I'm good. Worry about you. Get you to where you need to get to. The good news is, over in the Wealth Builders, we can help you do that. We're not experts. We're just regular people headed in the same direction. Almost 1,100 of us headed in the same direction, which is freedom over things. If you want to join us, click on the website, go to the membership tab, go to the join tab, or send me an email and say, Richard, send me that link to the Patreon site. If you want to do it that way, that's okay too. But I encourage you to go through the website. All right, man, I'm out of here. Appreciate y'all. Y'all have a great Friday. I'm going to have a great Friday. The weather's looking pretty good here in South Florida. We've been raining all week, but today, man, golly, you know, the good Lord is smiling on us. Man, he smiles on us every day, but you know what I'm saying. He giving them the beautiful blue. Whoa, looks like we got a few more clouds out there right now, but I'm going to still enjoy it. Why? Because God has given me this blessing to enjoy it, so I'm going to enjoy it. Y'all enjoy yours. Please do that. Please go out and do something nice for yourself today. Also do something nice for somebody else. Spread some love, some joy, right? It's so easy just to smile, right? It takes half the energy to smile than it is to be frowning. Put a smile on your face. See, too much energy to frown. Just turn it into a smile. 50% less energy. You won't be tired. You won't be sleepy and yawning during the day, right? You ain't got to take a nap during the day. Start smiling more. You ain't got to take as many naps during the day. I'm just telling you. You ain't got to take that many naps. I'm 56 years old, man, and I feel great. Why? Because I smile. I help people. See, you got to help people. Smile. Don't be negative. Be positive. Gives you more energy. Gives you a better outlook on life. You see what I'm saying? Appreciate y'all, man. Hey, stay strong, stay long. Lock it in with a thumbs up before you get out of here if you don't mind. Appreciate y'all. I'm going to see y'all tomorrow morning at 10:30 a.m. Eastern time. Until then, thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'm going to catch you guys on the next one. Peace.